Stop calling Nvidia just a chip company. Seriously. If you think Nvidia's business model is just selling GPUs, you haven't been watching what they're doing. Here is the counterintuitive truth that every AI investor needs to understand. Nvidia just became a bank. They launched a revenue sharing and credit support model that lets AI cloud providers deploy GPUs without carrying the full capital expenditure. Sharon AI will deploy up to 40,000 GB 300 GPUs in Australia. Firmus Technologies is building an AI factory campus in Indonesia with up to 170,000 GPUs and 360 megawatts of power. That's 210,000 GPUs on Nvidia's financing. The model, AI Cloud sell Nvidia-powered services. Nvidia earns hardware revenue and a cut of cloud revenue. Investors already have concerns about circular financing. The stock dropped 1.4% to $194.83. But this could be brilliant. Nvidia is creating a recurring, usage-linked earnings stream. Let me break down the strategy. And stay until the end for the 3 secrets that will change how you value Nvidia forever. Let's start with the partnerships. Partner 1. Sharon AI. They are deploying up to 40,000 Nvidia Grace Blackwell GB300 GPUs in Australia. The focus is sovereign, large-scale AI compute infrastructure. Partner 2. Firmus Technologies. They are building an AI factory campus in Batam, Indonesia. Expected to scale to 360 megawatts of power with up to 170,000 Nvidia GPUs. This follows the DSX AI factory design, hardware, facility blueprint, and financing in one Nvidia-defined package. Total, 210,000 GPUs. The target customers, AI natives like Bassetane, Fireworks AI, and Together AI, companies that need immediate access to AI cloud capacity for model training, fine-tuning, and high-volume agentic inference. The counterintuitive truth? These aren't small pilot projects. This is a massive commitment. 170,000 GPUs in one campus is the scale of a hyperscaler. Now let me explain the model. The problem Nvidia is solving, even long-term commitments are insufficient to unlock financing for compute. Emerging AI companies can't get loans to build massive GPU clusters. Nvidia's solution, revenue sharing and credit support arrangements. How it works, AI cloud providers procure Nvidia infrastructure. They sell Nvidia-powered cloud services to customers. Nvidia earns standard product revenue from hardware sales and a recurring, usage-linked share of cloud revenue on the supported capacity. CFO Colette Kress said this structure accelerates adoption of Nvidia platforms and provides Nvidia with a recurring, usage-linked earnings stream. The counterintuitive truth? Nvidia is moving from a one-time hardware sale to a recurring revenue model. Once the infrastructure is deployed, Nvidia gets paid every time a customer runs an AI workload. Now let me address the elephant in the room. What is circular financing? Company A provides financing to Company B. Company B uses that money to buy Company A's products. It can work well in boom times. But if the economy falters, these interconnected deals could create problems. Why investors are concerned? Nvidia has been doing variations of this for years. In 2024, they did a $6.3 billion backstop for CoreWeave. In 2025, a $1.5 billion deal with Lambda. In 2026, a $2 billion investment in CoreWeave. Jensen Huang's response, ridiculous to call it circular. Whatever we decide to invest is a small percentage, very small percentage of the overall amount of infrastructure, capital they're going to have to raise. Michael Burry's warning, the big short investor compared Nvidia to Cisco before the dot-com crash. The counterintuitive truth? Nvidia's total investments are small compared to customer spending. Huang says these are generational companies, the investments that we make is confidence in them. Now let me talk about the stock. Current price, $194.83. Daily move, down 1.4%. Year-to-date 2026, up 4.59%, underperforming the S&P 500's 9.32%. Technical picture. Trading below the 50-day moving average. Just above the 200-day line. The correction. 17% from the all-time high of $236.54. The disconnect. Last quarter revenue hit $81.6 billion, up 85% year-over-year. Guidance near $91 billion for the next quarter. Confirmed orders for Blackwell and Rubin chips are around $500 billion through the end of 2026. The counterintuitive truth? The stock fell 17% while demand went up. Corrections like that are positioning resets, not trend changes. Let me leave you with the 3 secrets that connect everything we just discussed. Secret 1. The platform shift play. Nvidia is no longer just a chip supplier. They're becoming a platform. Revenue sharing means they get paid every time AI inference happens. Hardware is one time. Revenue sharing is recurring. Secret 2. The circular financing debate. Critics call it circular. Huang calls it confidence in the future. The truth, Nvidia's investments are tiny compared to what customers spend. OpenAI alone is committed to $1.4 trillion over 8 years. $2 billion is a fraction of that. Secret 3. The 210,000 GPU signal. These aren't small deployments. This is massive scale. 170,000 GPUs in one Indonesian campus. 40,000 in Australia. AI infrastructure is still growing fast. So what should you actually do with this information? If you own Nvidia stock, the revenue sharing model could create recurring revenue that makes Nvidia less cyclical. But the circular financing narrative is a headwind. Watch for any pullback below $190. The 200-day moving average is a key support level. If you are a trader, the stock is down 17% from highs, a positioning reset, not a trend change. If Nvidia breaks above $204, momentum could return. If you follow AI infrastructure, this is a validation that AI data center demand is real. These companies are deploying 210,000 GPUs. They're not doing that if they don't believe in demand. Here is my question for you. Do you think Nvidia's revenue sharing model is a genius platform strategy, or a sign that the AI bubble is getting overly leveraged? Drop your answer in the comments. I read every single one. Like and subscribe if you want more analysis on AI infrastructure stocks before the crowd finds them. I'll see you in the next video.